Hi, this is Steve and welcome to my blog. This is just for me really. It's not investment advice in any way. It's purely for entertainment. It's really therapy for me. And the main issue of the day now is eToro, is the Forex. I'd have eToro because it's like a poor man's. It's a bit like the others, like Zulu Trader, Orlando, whatever they're called. There's one or two more, but I stick with eToro because they send the money through PayPal. It's easy. I've never had any trouble with the money. Certainly, I don't have any trouble being paid or anything. And it's easy. I mean, bear in mind, I'm a hobby. Look at this. I'm a hobby investor, really. I'm not. So how have I been doing? Well, not very well. Bear in mind, I've only been doing this with proper professional money for about a year, and I'm not really in profit, to tell you the truth, because I made silly mistakes. I have a rule now where I never bottom out a trade. I mean, they're not very professional, but I change the stop loss and put more money against it, and I just ride it and ride it and ride it until it comes back into profit. Somewhere it says, is this the one? Yeah. So like in 7 days I made $24 so it was at $3 a day, something like that. So you think, oh, only 3%, so what, 3, 6, 9, 12% in a month, if that the case. Well, you think, well, that's not so bad. I mean, professional fund managers are aiming at 10% a month over a year, spread over a year. But when they don't even get that, if they get 5 to 7%, that's pretty much what they're working on. So, but do look at the bigger picture. 30 days, come on, 9%. But if you look at a bigger picture over 3 months, see, it's nowhere near as much. Has that gone in? That's not, I haven't even loaded up yet. There we go. It's not. It's way down. It's more realistically less than 5%, because when you go here, you can see why. I won't get up the actual losses of the things themselves. It's too complicated and takes too much time. And, you're probably bored already. But if you hit my stats, this screen and Cast-O-Matic thing slowed it all down. Really, to be honest. Come on. You see, this is the reason. I mean, it's silly mistakes. Whereas if I'd never let it bottom out, I had some 2 or 3 bad trades when the euro turned around and the yen turned around. And if I'd have just put a bit more money on it and just waited, didn't have such a big what's the word I'm looking for? Just have such a big thing, which I've forgotten the word for now. But leverage. I think of the word. It's such a big leverage. It would have come true, and I wouldn't have made a fantastic amount of profit. But saying like this, I wouldn't have made a loss. So could I make a living doing it the way not the way I'm doing it? But I'm learning all the while. You see, and in previous years, sometimes it shows a year up here, sometimes it doesn't. Oh, here we go. Look. So I had some months when I've done really well. I mean, quite. If it had kept up like that, I'd have been in clover. But of course, it hasn't. It can't always. Bear in mind, these 2 years I was learning, never even took it seriously. This year I was learning it. This year I've been trying to do it in earnest, and haven't done very well up to now. But the thing is, I made mistakes not through technical. What's the word I'm looking for? Not through technical anomalies, not through technical mistakes. Just silly, lazy, it's just ill-disciplined things. I try to learn from what professional traders advise me to do. That be modest, don't be greedy, try and learn from your mistakes and things like that. And they're just mistakes I made. The one of them, I wrote it down here somewhere. About $112, I think, in this month. Made a loss of about $112, and they were for the silliest mistakes. So, but they weren't because I put my money on the wrong horse, or I backed. Let's get the chart up, or I backed the chart the wrong way, or anything like that. I didn't misread the chart. Basically, it's silly. Get this one up here. Usually the yen works out quite well for me. It has done. I predicted exactly what it'd do, sort of thing. But around about here, around about March, Aprilish, when I was I'd gone I'd gone short, and it had ridden up and up and up, and I just if I'd just waited, I'd have been all right. And it's the same thing. It's, you know, that don't take my advice, of course, but there's a silly mistake. I mean, I won't give my analysis of what's going to happen here or anything, but you can see this is even on a daily. This is a steady down here, steady down. And if you did a Fibonacci retracement, you can see the 50% had come somewhere around here. So there's a possibility it'd bounce up. So, you know, I have done a video already on the guys I follow and the advice that they give, which is very, very good. So I won't give my two penn'orth here really, but some ones I like. Here is the pound. Now the pound is set to go catastrophic, certainly to retrace. Oh, what have I done here? I've got it on the wrong one, that's why. Come on the day. And today, that's better. And it's certainly set to retrace somewhere up here. The 50% of the Fibonacci is somewhere around here. So it's better there. Once it hits that, then you have to think again. But everybody advises to leave this alone at the moment. I've messing it all up. This is the sort of thing. I think the euro has gone crazy. It's done very well after the French elections, and so you can play off the one against the other. The trick is to know what the euro is going to do and what the pound's going to do. Now the euro usually is pitched against the dollar as the pound. So if you can find out what the dollar index is going to be, which I'm not even sure if I got that up here. Anyway, no, I messed it all up. Once you can figure that out, you got yourself a ball game, because you can predict. You know, it's usually within a few hours. The delay of one will hit the other, so you can predict what it's going to do. Personally, I think the dollar is set to go up a bit more, then plough down. The pound is supposed to go up again. So you want to be short in this, not too much, because it will retrace somewhere. There's a resistance line around here. Once it's done that, it'll think again. But for the moment, yeah, it's a slower way of making money, but that's what the theory is. What else have I got? Canadian dollar. This is one. I remember holding my nerve with this way back. Of course, I've cleaned all these charts. I haven't got it up like I do with some of the other ones. But I remember being somewhere in here thinking, God Almighty, is it ever going to drop down? Will I ever get money? And look at this, what wonderful. And then the vice versa, thinking, God, will it ever go up? And of course it does. If you're not too greedy and you can get a reasonable I keep forgetting that word. Leverage. As you keep a reasonable leverage, you won't get stopped out. I I've experimented with 25 and 50. 50 is a disaster. 25, I'm not sure if I'd recommend it. There's some anxious moments. 10% is not too bad. If you're a numpty learner like me, 10% is pretty much what you want. All the experts say that for novice learners, the acolytes, that should stick to 10%, and that's what I'm happy with. So this is supposed to go crazy again because there's problems with oil and there's problems with Mr. Trump, the Canadian thing. Some crazy thing he's brought in about Canadian timber, the lumber law. So this is set. The dollar's going to go up. The Canadian dollar will go down. So this will go back further. But as you can see, not too much because it won't retrace higher than this. If it does, then you've got yourself big problems. But if you keep within these modest, see if I can do it. So shouldn't attempt these things live because they never quite work out the way you fondly think they do. And Etoro, oh come on, that's got you. There we go. Not too bad. This is not the expert way of doing it. It's my way of doing it. I don't really bother with the expert way of doing it because it never seems to work to my mind. We see 50% is here, so if you had the RSI and the MACDs and all that, it would say it's oversold. So once it's gone through the 61.8 level, then theory is it'll just keep going. But if it doesn't do that and it starts bouncing around and bouncing around and bouncing around, then you've got to think again. Then it's just as wise if you've already got a trading play to short it, and if you've done that, then you've got yourself a ball game. But that's just my opinion. That's not the experts don't do it like that. See the euro. Etoro have just done this pro chart thing. I've got mixed opinions about it, to be honest. Look at this gap I got well kicked in with this. Well caught out with it, but not too bad. I didn't stop losses are somewhere way up here, so not too bad. I'm still there, but I've got to wait for that to retrace right back down there before, and it's got to come way down here before I'm in profit. And you're not supposed to do that. If I was working for a professional hedge fund, I'd be sacked by now for doing that, but not to worry. Not too bad. Australian dollar, which relies heavily on gold. It follows the path of gold. It's going down because gold's gone down. And if Mr. Trump starts nuking North Korea, this probably might go back up again because people flock to safe haven things, gold, because if you're going to flee a country as a refugee, paper money ain't no good. You've got to have gold coins in your pocket for transferring money from one bank to another. So it's they do well out of that. And of course that's the opposite to yen. Yen will go the opposite way. I won't put it up now. But that's the little I know about it. I know you're not supposed to say that. You're not supposed to do it like that. But that's how I know it works. I don't do oil and where's the dollar index? Let's pull that up. It's the dollar index. Yeah, the dollar index. And this and oil, these set the benchmark. This dollar index has gone way down, and that's the way of things, really. I think we'll leave it there. And see you in the future.